So yesterday, Rachel Reeves, our Chancellor, spoke about what's exactly in the budget, and it looks like that a lot of us will be affected on some level. So this is actually the biggest tax rises that we've seen in this country since 1970. So you're going to want to stick around, watch this video, as I'm going to outline the key points from the budget, what's affected us here in property, and then also even outside of property, what in the budget could affect you as well. So let's get into it. So firstly, there's going to be 2% surcharge on personal income for landlords. There's going to be a 2% surcharge on savings, and also a 2% surcharge on dividends as well that are extracted from a company. So let's talk about landlords first. So currently landlords are actually taxed quite heavily. When I mean landlords, I'm specifically here talking about landlords in their own name. So this is actually who it impacts. So basically, depending on what their income is, then they're either going to pay the basic rate of 20%, the high rate of 40%, or the additional rate of 45%. So actually now they're going to be paying an additional 2% on top of that. So it'll be 22% if they're a basic rate taxpayer. It'll be 42% if they are a higher rate taxpayer, and it'll be 47% if they are additional rate taxpayer. And bearing in mind as well, this is also coupled in with Section 24, where landlords can't even offset a mortgage interest as a cost. Bar a small mortgage tax relief of 20%, they can't actually offset anything additional with regards to the mortgage interest. So this is going to impact landlords more and further drive landlords that have properties in their own name to potentially sell. Rachel Reeves' justification was that tenants pay full taxes and national insurance, so why shouldn't landlords have to pay additional taxes as well? So that would be coming in on April 2027, and same with savings as well. So the interest that you make from savings will have an additional 2% surcharge. So in relation to that, really, you should be looking to put, if you've got savings money sitting there, not really doing anything, then the least you should be doing is really putting it into some form of ISA, right? Because the money you put into an ISA, as long as it fits within the threshold for that year and the allowance, you won't be taxed on any interest that's made there. So with regards to dividends, a lot of directors and shareholders will actually extract dividends from the company. So at a basic rate, this is currently at 8.75%, but this will be moved to 10.75%. At a higher rate, this is 33.75%. This will be 35.75%. And the additional rate is actually staying the same. And this will actually be coming in from next April. Touching on the ISA limit, as I've mentioned it here. So currently, there's a cash ISA and a stocks and shares ISA allowance of £20,000 every single year that you can put into it. And any interest that's made on top of that is all yours. There's no tax on it at all. However, that threshold for the cash ISA part is going to be reduced from £20,000 to £12,000. And this will be coming in from April 2027. Now, the reason why this has actually been reduced is to incentivize more people to actually put their money into a stocks and shares ISA. Now, although I get the sentiment behind this, actually I'm kind of for it. Instead of reducing the cash ISA, I think more should be done to actually educate people and get them to understand why stocks and shares ISA is probably preferable in the long run. So coming back to property as well as this, what we're also going to be seeing is mansion tax. So what this is for any properties worth more than £2 million, then there's going to be a council tax surcharge of £2,500, and this will be rising to £7,500 from properties worth £5 million or more. Now, there's also been an income threshold freeze as well for the next 3 years. And actually, this is actually going to mean more people are going to pay more tax, because with inflation and wage increases over time, then people are going to move into the higher bands. Those that are in the basic tax bracket will move into the higher tax bracket over time, and those in the higher tax bracket will move into the additional. Also, from 2029, there'll be a cap on the amount of money you can put into your pension without any national insurance contribution. So this is actually going to be £2,000. The other thing that's also been implemented, which I think is very interesting, is the 2-child limit on the amount of universal credit and child benefits that you can receive is going to be abolished as well. So people can actually have more children and ultimately receive more welfare support. So I personally don't like this, because it almost incentivizes people to actually not work, and they can actually have more children and get more money from the state. And then those that are actually working and are actually making money, whether it's in their respective companies or if it's just landlords that have got their properties, are being taxed more. So for me, it doesn't even look like the Labour government want to incentivize people to work or create businesses. And ultimately, that's the thing that actually will drive economic growth. Here, we're actually trying to protect people that aren't working. And yes, to some extent that makes sense, because for some people, they actually cannot work. So for sure, I think there should be something there to actually accommodate them. However, it does feel like that actually not working could probably make you better off than actually working and giving your money away in the form of taxes. So that's some of the key highlights from yesterday's budget. It'll be interesting to see what you guys think. What do you think of the budget? Was it better than you expected? Was it worse than you expected? Was it roughly what you thought? You know, we saw a lot of things and a lot of commentary that was happening leading up to the budget. We heard about national insurance that was going to be put on landlords. There was also this idea of a 20% wealth tax on those that leave the UK and things like that. And I don't know if it was just fear mongering to get people in a state of fear, and then actually the actual budget maybe wasn't as bad as people expected. I'm not sure. So feel free to let me know exactly what you guys think in the comments. So hopefully you enjoyed this video and it helped you understand a little bit about what was in the budget and how it's going to affect you. So if you enjoyed this video, do give it a like, and you found value from this video or any other video on this channel, then do subscribe as well. And until next time, happy investing.